Welcome to Trader TV, your insight into trading for professional investors. I'm Dan Barnes. Bond traders can find accessing liquidity challenging, especially in volatile markets. Joining me today are Howard Hoskin and Paul Mutter of Fenix to tell us how a new tool, Fenics Invitations, is going to enhance access to liquidity. Howard, Paul, welcome to the show.
Thanks for having me on.
Thanks, Dan. Great to be back.
So Howard, starting with you, could you tell us what is Fenix Invitations and how is it boosting access to liquidity?
There are multiple problems in the market around how you get the proper execution with the proper sell-side liquidity providers. Am I connected to the right people? If I'm not, do I go to a platform that offers match principal, that offers an ability to hit people who I might not have lines with? Information leakage is another massive issue when you're trading bigger size tickets. So we've developed a protocol that is trying to address these each in turn and provide it into the same protocol, starting off in emerging market hard currency.
Fenix Invitations is really harvesting the liquidity that we have access to via our bank connectivity. As the world's largest interdealer broker, BGC is connected and on the desktop of all of the traders around the world that are trading the asset class we're developing a protocol for. In particular, we have access to many local banks that the Buyside client base might not otherwise have access to. And so we're matching that unique liquidity through a carefully designed protocol so that the Buyside and banks can talk to each other, maintaining their own relationships, but tapping into that liquidity.
When we're talking about the Buyside specifically, what are the advantages that Fenix Invitations is going to create for them?
Through our Fenix market data, we have a ticking mid-price that runs throughout the day that will change and update every 5 minutes. So it's going to be attractive for the Buyside, whether they're buying or selling. One of the challenges that the Buyside have is trying to find the liquidity in the right places. Often they know where it is. They receive certain axes and runs coming through from various different sources.
Yeah.
And they're able to access those because they have lines with various dealers. In lots of cases, they don't have lines. In some cases, the axes are not current. Sometimes they are. What we're trying to do is we're taking and using our IDB network to be able to anonymously route their inquiry to the right people who are interested in that particular bond, that particular ISIN. How are we doing this? Well, we've created a request for auction protocol, which enables the buy side to trade whenever they want during the day and start their own private auction. The beauty of the system is that the sell side who participate back into this particular auction, they can deal with 1, 2, 3, 4. It doesn't really matter how many come back. And they have one ticket, one shape. They face one central counterparty, which is us at BGC, as do the sell side. And they're able to access the street of liquidity in that particular bond at that time.
The sell side, of course, have got lots of different trading venues that are reaching out to them. Why do sell side firms care about this? What do they get from this?
The sell side want to know what is going on in a particular ISIN, irrespective of whether it suits them to trade or not. They still like the information. So receiving tickets in bonds that they have recently been playing around in, so they are therefore interested in buying or selling, can be construed as being critical to them. Certainly critical if other people have that information and they don't.
The fundamental approach we've taken is preserving and supporting the dealer to client relationships. The market has benefited from the evolution of RFQ and anonymous all-to-all trading, but there's also room for banks to have relationships directly with clients, and our protocol supports that. I would also say for the banks, we're providing price certainty. That's a double-edged sword, but many of the platforms involve the dealer making up a price, putting it in, seeing where they fit in competition, or some sort of negotiation around a price.
Yeah.
We believe by using our Fenix market data mid-price and providing that to both sides, presenting it to both sides, they have clarity on what the price is, and they can decide to trade or not trade.
People are very time pressured at the moment. How will you enable them to onboard, given the little time they have to get involved in strategic projects today?
The first banks told me up front exactly that. They said, Howard, look, if this involves me going to technology or me onboarding something that is considerable, I don't have the time and I don't have the budget for it. But in terms of ease of access, they already have our system. It's called GBX, but it's the IDB system that they log into every day, first thing in the morning, along with the other systems that are critical to their existence. This protocol comes up in that login. They will just receive a pop-up, hopefully in a bond that they're interested in because they've had activity in that particular bond in the recent days.
By harvesting the BGC global network of regulated entities, we believe we've structured the fastest time to onboard a new credit platform to date in the marketplace. We're operating on a global footprint with a OTF in the UK, an OTF in the EU, and an ATS in the US. You have to remember our initial asset class is emerging markets, and that's a global asset class. And the way we're tackling that problem is our buy-side clients pick one of the 3 regulated entities which they face. We then take care of onboarding all of the banks to the other entities, many of which the banks are already onboarded to. And so we flip the switch on, and that one buy-side can access that global network of bank liquidity. We have over 200 clients onboarded to the system. We've done our first in-market commercial trades, and we're very optimistic about our speed to market on this platform.
Now, if I'm a buy-side trader, I might be trading for different types of portfolio, insurance, passive, etc. How can I access the platform?
So the buy side have got multiple different ways that they can access our system. On the simplest version, you have a buy side who hasn't got integration, trading off spreadsheets or something like that, and he might want to do voice trades. So we can do on behalf of. So he gives us an order, we put that into the system, it executes or doesn't, and we send the field back via a chat or something similar. Post-trade, we'll send a VCon, and that VCon comes with all the STP's connectivity that he may or may not have done with VCons he's receiving from lots and lots of other products. Hedge funds, they tend to prefer to have a look at GUIs and use it that way. We have a GUI that they can sit and enter the orders electronically, and then we send them a VCon as the same STP off the back of that VCon. The asset managers, lots of them use TSOCs. They're able to access our products through an auction board inside of TSOCs, and the fills for that buy-side trader will then come back into TSOCs, which then has pre-integration, if they have set it up, with the OMSs, which then gives them that STP straight back into whichever OMS they have. The other method is through our Loom Alpha product, and that will follow the same STP through our own pipes.
If I was a trader and I were looking at this compared to an RFQ platform, what does this do differently?
RFQs give up the buy side from the start. It does give up the direction of the trade, and it does give up the size that they want to trade, all pre-trade. People are less concerned about that in smaller lots. In the credit space, the average ticket size on RFQ, might be $500,000, $1 million, something like that. The average ticket size in an auction, it's more like 2 to 5 million. What a user might not want to do is to say, hey, I'm a buyer of 5 million of this bond that hasn't been traded in a few days or a month or a week, and tell some anonymous people that he's one side of that trade.
Where is Fenix Invitations going to go next for clients?
We're hearing an appetite for the same protocol in high yield, investment grade, super sovereigns, and then local currency emerging markets. And so it's on our near-term roadmap to expand the protocol to those asset classes in response to customer demand.
Fantastic. Paul, Howard, thank you both so much.
Thanks, Dan. Great to be with you.
Thank you.
I'd like to thank Howard and Paul for their insights today, and of course you for watching. To catch up on our other shows or to subscribe to our newsletter, go to tradertv.net.